Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to share with you 5 of my favorite dividend paying companies. Last few months, if not almost now a year, the stock market has been absolutely mad. Yesterday was the worst one that I've seen. At one point yesterday morning, just before the markets actually opened, the Dow Jones was down 600 points, right? Then you would think things are completely going the wrong direction, everything is doom and gloom, and then guess what happened by the time the market closed? It was up about closer to 900 points. Are you telling me that's normal? That makes absolutely no sense. Everything here before the markets opened, the futures were actually all in the red, majority of them. The S&P 500 was down. There's Nasdaq is now closer to what it was in 2019, right? And everything is just going, and a lot of it is obviously because of the inflation in the US. The report that came out yesterday was worse than expected, blah blah blah. All of that happened. You think it's going to be a red day, hopefully we'll buy a couple of stocks, but then boom, it's literally the markets open, and then within a few hours it was just green to the point where every single company you can see here right now was up at least 2 to 3%. So it's very crazy what's going on at the moment, and we just have to keep in mind what we need to do as investors. And when you look at the extreme fear here, like this is the CNN business section, fear and greed index, and normally about a month ago it was just here, and now we look at extreme fear. And that happens because everyone is just worried about what might happen, and especially in the UK, where they basically keep changing their mind, and the government, that is, and the Bank of England is trying to stabilize the market and by buying more bonds and so on. So everything is up in the air, but you just have to think about the long term. Okay, like Warren Buffett always said, be greedy when others are fearful, okay, and be fearful when others are greedy. So right now we're extreme fear. So this is where we look around our portfolios and say, do you know what companies can I actually add to my portfolio? Some of the companies that actually are really down a lot, that I think in the long run will absolutely be fine. They have a great business model. There's nothing wrong with their business. They are okay. They might go through this turbulence for the next couple of months, but they will come back. They will be stronger. They will have good earnings and so on. Talking about earnings reports, okay, so this week basically we had for the first time, we had some of the companies reporting. So this week, Wednesday, we had PepsiCo came up and just said, you know what, we are okay, we're making money. They have sticky business. They increased their prices in terms for their products and so on. They have a good quarter. They beat basically top line and bottom line, and their guidance was actually better than expected. So yeah, the stock went up, I think 3-4% on that day, if not more. And TSME came up, actually beat as well. But again, they said they're not going to spend as much money as they were planning to. I think there was like $44 billion that they wanted to spend. Now they reduced it to $37 billion because of what's going on with the semis there. And today we're expecting the big banks to actually report, the JP Morgans, the Morgan Stanleys, Wells Fargo, Citi. On all of these companies, all of these big banks will have a major impact, no doubt, on what happens in the market. And then next week we've got similar kind of situation, okay? We've got the situation whereby majority of the companies that are reporting are big boys, and that could crash the market. So we've got Charles Schwab's, we've got the Bank of America and so on. So when the earnings reports start is always a good time to add to your portfolios, because this J&J might come up and say something that is negative or something unexpected, and therefore it might just tank. So that gives us good opportunities. Another company, ASML, the Teslas, Procter & Gamble, Union Pacific, all of these companies that are reporting could potentially give us a chance to actually add to our portfolios if the market goes down the way it is so far. So what we now need to do is look around and see if there are companies out there, especially these are 5 companies that I own in my portfolio. They are really my favorite companies and the dividend companies. The reason they are is because they increase their dividend year in, year out. They have a free cash flow that's really good. They have the growth side of it, and they seem to be either fairly valued or undervalued at the moment. Okay, so let's get started on this. And this is the kind of investment you want to own in your portfolio, because it will help you sleep well at night. And when you see these companies down, you will actually add to these companies. And I have actually a video coming up soon where I will share with you some of the new buys, inshallah. Okay, so this company, the first company is Home Depot. This company is obviously the home improvement sector, consumer cyclical. It has a wide economic moat, currently trading $282 per share, and basically 2.69% of dividend yield, which is very, very high for this company, and 5-year growth rate of 18%, which is absolutely brilliant. Normally 7 or more I'm happy with, but 18, that's absolutely brilliant. Payout ratio less than 50%, which is nice. Dividend yield for 13 years of increasing that dividend every single year. They have increased that for 13 years. 87% safety, which is absolutely brilliant. Then profit margin of about 11% and free cash flow of $10.8 billion in the bank. So that money, they can actually pay off some of their debt. They can buy back their own shares. They can pay as a dividend. They can reinvest in the business. They could do a lot of things with that money. Okay, total return in the last 10 years, we're looking at about 18.42%. Next 5 years, the expectation is the earnings to grow about 16% every single year. It's fairly valued at the moment, and $267 per share is where it should be, and right now $282 is where it is. So according to Morningstar, okay, it just needs to come down a little bit more and get to their basically below their fair value, and that's probably where I would start basically adding to this company again. Now the next company is one that is really undervalued at the moment, okay, according to Morningstar, is UPS, industrials company. It has a wide economic moat, $163 per share. That's where it is now. It has 3.72 dividend. I haven't checked the dividend yield recently, and when I saw that and when I was planning the video, I was like, wow, that's quite high. And then 5-year growth rate of just 6%. Payout ratio less than 50%, or just 40%, and dividend streaks of 12 years of paying that dividend and increasing that dividend. Safety 69%, which is very nice. Profit margin about 11%. Free cash flow, we're looking at about $10.93 billion, and about 11% growth of basic return in the total return in the last 10 years. Next 5 years, they're expecting about 5% growth, and then Morningstar is actually saying it's about 2% discount at the moment. $186 per share is where it should be in comparison to $163 per share. Next company we're looking at is Broadcom. Again, a great company, one of the companies that I absolutely love and will be buying more of. I will share that video very soon. Okay, $437 per share. Has a 3.74% dividend yield, 43% 5-year growth rate. Check this out, 43% in the last 5 years. That's absolutely huge. I don't think that's basically what they will be doing in the next 5 to 10 years, because that's not sustainable, 43%, right? But payout ratio only 47%, so they can still increase it, and they have been doing this for 11 years. Safety 67% and 31% profit margin. $15.3 billion of free cash flow, 31%, almost 32% basically total return in the last 10 years, and growth estimate in the next 5 years expecting about 15% and 30% discounted right now, 30%. Hence why I'm actually buying more of this company, and I will share that video as soon as I get to it. $624 per share, where it should be right now. We're looking at about $437 per share. Next one is Lowe's. Lowe's is one of my favorite companies out there, similar to Home Depot, home improvement sector, consumer cyclical, and then it has a wide economic moat. Price is $193 per share. I have not seen this company, well, this year was the first time I actually seen this stock below 200. Dividend yield of over 2%, which is really nice. 5-year growth rate 18%. So these two companies are almost mirroring when it comes to that growth side of things, for only 27% though when it comes to payout ratio. So they've got massive room to actually increase if they want to, and they are a dividend king. 59 years of increasing that dividend, 59 years. Safety, we're looking about, remember, a lot of stuff has happened in that 59 years. We have recessions after recessions. We have a million different things going on. right? Have they actually cut that dividend? Absolutely no. Have they increased it? Absolutely yes. And this is why I'm confident in these companies, because I'm looking at, obviously the past does not tell us what's going to happen in the future, but obviously it kind of gives us an idea of what might happen. So if this company continues, then I'll be happy, man. Safety, we're looking at about 93%, about 9% profit margin, and $7.5 billion in the bank. Total return 21% in the last 10 years, and growth we're looking at about 9% every single year. It's fairly valued at the moment. $212 per share is where it should be. And final company, one of my favorite companies, if not the favorite company in the world, is Microsoft. It has a wide economic moat, $234 per share, 1% dividend yield, 5-year growth rate of only 10%, but 10% is amazing. This is still growing every single year. Payout ratio only 27%, so they have a massive room to improve that if they want to. 12 years of increasing that dividend, 99% safety, 37% profit margin. In terms of free cash flow, $65 billion. And like I said before in previous videos, obviously because of the Activision Blizzard deal goes through, this is probably some of the money they will be using and so on, but it's still great to have that in the bank. Total return almost to 24% in the last 10 years. Expectation in the next 5 years, every single year, it should be about 15%. Even if we get 10%, I'm happy with Microsoft overall. 33% discounted right now, $352 per share, where it should be. A lot of analysts that came out recently and downgraded, but it still is nowhere near where they are saying it should be. So there you have it, 5 different companies that have absolutely amazing dividend yields. Okay, apart from Microsoft is 1% is decent, but you get the growth with that. 5 years growth rates about 10%, 6% or more. Payout ratio really low. Dividend streaks have been paying for a long time, and then their safety is quite good. But the most important thing is the cash they have that will be able, that will help them to sustain that sort of a dividend. And obviously a lot of them are discounted at the moment or closer to their discounted values. So there you have it, 5 different great companies. So when you see the stock market going down, whatever, make sure you've got your watch list like I've always said, and then do what you need to do. Obviously it's your investment. I'm not giving you advice. You do whatever you want to do with your own money. I will do the same with my money. But in the end of the day, what matters is that you're looking in the long term and not basically what's happening in the markets. So let me show you what happened yesterday, right? So yesterday was the 13th of October. Okay, before the market opened in the US, I had 56,800 pounds. When the market actually, and that was, let me show you, let me go back, almost 1,600 in profit, about almost 3%. When the market opened, okay, I had 200 pounds in profit and 0.37 in terms, so we went almost in the red. And by the time the market closed, we were 57,400 and almost a 4% up. So this is what's happening in the market. Is really not realistic what's happening. So have your watch list and keep consistently investing in the great companies, and don't worry about what's happening right now. I've got a couple of more videos lined up. If you like this kind of content, please subscribe to the channel. And again, this portfolio is in my trading 212 account. They are still taking people because I actually got free share, as you can see, Adidas a couple of days ago. So I'm going to keep it actually because it's Sharia compliant. So I'm just going to keep it. Maybe this company, by the way, they're being cheeky. I think it was £10. Yeah, but it was worth £10 I think when they gave me. But it doesn't matter. I'm just going to keep it. The most important thing is that if you can open an account with them and use the link, obviously you get your own free share. I'll get mine. If it's non-compliant, I'll sell it and give the money to charity, and maybe you could do the same thing. Right, assalamu alaikum, take care, have a wonderful day.